We're news for business people.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. You're watching IndianOpen. I'm Shah. Good morning, Nida.
Good morning, Neeraj and Avani. Good morning to all of our viewers. Let's get you the headlines this Monday morning. Tata Steel emerges as the highest bidder for two Bhushan Group companies, both Bhushan Steel and Bhushan Power and Steel, beating JSW to it. The Religare Group appoints 3 new board members and also announces a 1,200 crore fundraise as it looks to get its house in order. More banks put out their exposure to the 11,000 crore PNB fraud, even as 3 accused are sent to police custody by a CBI court over the weekend. And the Rotomac founder and defaulter Vikram Kothari is said to have left the country after swindling 800 crore from 5 state-owned banks. That's according to PTI.
One shudders to think how many more skeletons will tumble out of the closet, to be honest. But let's wait and watch. Nevertheless, how is the market looking like? Remember, last week, we had, you could argue, a forgetful week because compared to the rest of the world, we did precious little, and even otherwise, we were flat. So the Nifty Bank, ending the week very, very flat with a bit of marginal downside compared to what the rest of the world did. And I'm only using Dow as an example out here. 4.5% gains. Typically, there will be some positive correlation. 50% is what the Bloomberg terminal suggests, the correlation between the Dow and the Nifty, but that didn't stand out, and primarily because of the weakness in the PSU banks and the sentiment thereof. You could argue firmly that the market template has now changed, and firmly changed to a sell-on rally from a buy-on-dips market. It had been a buy-on-dips market. Every dip, about 2 to 3% max in whole of 2017 was bought into. One would have thought that even 2018 was turning out to be that after that 5.5–7% cut. But the last few days have shown that every rally is being sold into, intraday or otherwise. Look at the open interest additions as well. The Nifty Bank continues to add the short pile up to the Nifty OI is unchanged, but the Nifty Bank OI up about 5%. And if you just look at in this expiry week, what's the max OI for the Feb series? That's at about 10,600 call strike. 47% upside out there, 47% net addition out there, which shows that the market participants clearly believe that there is a cap at 10,600. The downsides could well go adrift beyond 2, but 10,600 seems to be an upside that is capped. Key levels to watch for the day. I think we corrected a fair bit in Friday's session, and they're closed sub 10,500. While we may start off about 10 or 15 points higher, I think people are keeping a close eye out on the 100-day moving average. We've bounced off a number of times from those levels. Let's wait and watch if that holds over the course of the next couple of days. The recent lows are at 10,286, and the 200-day moving average at about 10,065. So all key levels. But I think the 100-day moving average has proved to be a pivot. That's from that level we bounce back consistently. Let's wait and watch if we do that. By the way, just a quick update on this SGX news as well. I think the news that the Bloomberg terminal has put out is that the SGX is going to work with the NSE to develop international trading link. It believes it increased the participation in the Gujarat International Finance Tech City and on SGX. But the reason why this is important is that on Friday, we had this news about how MSCI has warned that there might be a rating change if indeed the measures continue as planned, and unless some resolution comes about. This may well turn out to be the resolution, so that should make people breathe a sigh of relief. Just very quickly, 2 or 3 stocks to watch out for. Yes, we'll all be watching out for PNB and what it does, but I think Tata Steel and Bhushan Steel, and that will be the first item on first word as well, I guess. But this puts Bhushan Steel firmly in focus as well. Let's wait and watch what happens to that one. Religare has had about a 50% uptick since the lows of February. So it's a stock that's gained quite a bit. They've finally come out with an announcement. They've set up a new board. They've announced fundraising plans. Should be interesting to see what it does today. I'll be watching out for all the auto stocks. They're substantially off the recent highs. Maruti is off 10%, Eicher 17%, Tata Motors 20%. Very interested to see what happens to large cap auto over the course of this week as well.
All right, Neeraj, thanks so much for that. Actually, some of the things that Neeraj talked about as part of the trade setup are also there on First Word because we need to delve a little bit deeper. So we'll kick it off. We're talking about Tata Steel emerging as the top bidder for the two Bhushan Group companies, that's Bhushan Steel and Bhushan Power and Steel. Also talking about what the pricing suggests in terms of recovery for banks. That's the crucial thing to watch out for. Religare is looking to move on after Malvinder and Shivinder Singh stepped down. Will it be easy? Reliance Jio seems to have ended December in style in terms of the number of new subscribers. We'll get you the data there and we'll bring you up to speed in all the developments that have been taking place over the weekend on the Punjab National Bank fraud. That's coming up here on the show as well. But let's start with Tata Steel. So late Friday, it emerged that two bidders had, of course, lined up for Bhushan Power and Bhushan Power and Steel. But it looks like Tata Steel is ahead in terms of pricing. Vishnath Nair joining us with the details of the bids, which have been on BloombergQuint.com since Friday, but also giving us some perspective on what this means for banks. Vishnath, over to you first.
Right, Ira. So what we understand from our banking sources is that on Friday, there was a meeting of Bhushan Steel lenders. This is part of the insolvency and bankruptcy process that is going on. It was an informal meeting wherein details of the bids, both the bids that have come in for Bhushan Steel were presented in front of the lenders. There were two bidders, as we know, for Bhushan Steel. There was JSW Steel and Tata Steel, and this is what their bid position is looking like. JSW Steel, if you remember, was a company that they bid with two other partners as part of a consortium, and they put in about 30,000 crore, while in the case of Tata Steel, they bid about 45,000 crore. In this 45,000 crore, it is important to sort of split this and understand, what exactly this number is. 45,000 crore includes the 35,000 crore for the financial creditors in the system, which is largely lenders. There's also operational creditors who are getting about 1,200 crore, as you can see, as well as the working capital needs of about 9,000 crore. This is what we understand is the broad sort of split between various creditors as well as the company, as Tata Steel has put in. Lenders at this point in time are considering Tata Steel as the H1 or the highest bidder, as they call it, and henceforth will likely be only negotiating with them. Remember that there is still a formal meeting that is pending wherein this resolution will be passed, that the lenders will only be discussing the deal details with Tata Steel and negotiate further if they want the deal to improve. In the case of Bhushan Power and Steel, let's get the first chart up again. Bhushan Power and Steel's case, Tata Steel has bid about 17,000 crore, while JSW is about 11,000 crore. If you remember, when we had first discussed this story, the liquidation value in the case of Bhushan Power and Steel was at about 10,000 odd crore. So JSW's bid was very, very close to that 10,000 crore number, while Tata Steel is clearly sort of, outbid them with a 17,000 crore number. We still don't have the details of how this 17,000 crore is split between the financial and the operational creditors, but this is broadly the deal. So in both these cases, Tata Steel has clearly outbid JSW, and the lenders will only be negotiating with Tata Steel if they see that they can probably improve their share of the deal better and try and get more money out of the company. Once that happens, they will get respective approvals from their boards, and then the approval will move to the NCLT.
All right, Vishnath, a couple of questions. So first, let's look at Bhushan Steel. In that, you would compare the amount that they're offering to the financial creditors to understand what the haircut is, right?
That's right. So
let's go to that second chart, actually.
Yeah.
For Bhushan Steel.
Bhushan Steel's second chart, you can see.
Now we'll come to this in a minute, but we just want to look at the breakup of the bid for Bhushan Steel. So the financial creditors are getting 32,500 crore.
35,200 crore.
35,200
yes. So that is against the 56,000 crore number that Bhushan Steel's financial creditors had quoted when the resolution professional had called for financial creditors numbers. So that is the haircut. So that's about a 40,000. Yeah, right. So that's about a 40% odd haircut as compared to the 56,000 crore. It's pretty much in line with the 40-50% haircut that most market analysts were expecting when the process started. So that is still in that range. Of course, the final number is still pending, so we'll know more about the haircut later.
And in Bhushan Power and Steel, roughly, I think the haircut is lower.
No.
Lower than what it has been in Bhushan Steel?
No, so that's not correct, because Bhushan Power and Steel had a financial creditor debt of 48,000 crore.
48,000.
Yeah, so 17,000 crore is a pretty much, and this is inclusive of the operational creditors. So obviously, it's a much larger haircut as compared to Bhushan Steel. But Bhushan Steel was the company that everybody was looking at because it was a large company with a 5.6, MTPA sort of annual production capacity. So everything that will happen in that case will probably set the tone for all steel companies.
All right. Talking about all steel companies, Vishnav, we now pretty much have a sense of what the landscape looked like in terms of bidders. And in some cases, we also, of course, have, highest bidder information. But let's look at that.
Yeah, so the chart that's going to come up now is about what has happened in various cases. We know that in the case of Bhushan Steel and Bhushan Power and Steel, both Tata Steel and JSW Steel had put in their bids. In both these cases now, Tata Steel has obviously emerged as the highest bidder. SR Steel, we saw New Metal, which is sort of a special purpose vehicle wherein there's Revan Truia as well as VTB Bank, which holds the highest stake in the company. ArcelorMittal has put in a bid through its Indian subsidiary, but we don't know the details of that bid yet, so we'll come to that as and when we get those details. Monnet Ispat's case, there's only one bidder, that is JSW Steel. They've tied up with Piramal Bain to make a bid in this case. There again, the lenders are at this point in time negotiating with JSW Steel, trying to get a better value for the company. In Electro Steel's case, there are 4 bidders. This the company had announced in a BSE notification, so we know for sure that these 4 people are in the game. Vedanta, Tata Steel, Renaissance Steel, which is a Dalmia Group company, and as well as Edelweiss ARC, all 4 have put in a bid. From news reports, it seems that Vedanta is sort of leading the chart, but of course those details will come in as and when the lenders discuss it.
All right. So those were all part of the Big 12. So that's 1, 2, 3, 4, 5 companies where at least you're in the final stages now.
Yeah, but this is interesting primarily because Bhushan Steel was that one asset watched out for, right? Everybody wanted exposure to the eastern side of the country, and we knew that the 2 bids will come out to be aggressive. I'm just wondering if it is, if we can, infer if this is the nature of bids that has come in for Bhushan Steel, that will be the tone for the others. Sure, it will set the tone, but would it be in the same league or the same way as the bids have come in for Bhushan Steel, because it's probably a more prized assets compared to the others, at least from a steel company's perspective?
At least in SR Steel, the only other comparable asset is SR Steel in this with Bhushan Steel. So there again, the 2 bids have come in, they've yet to open it. As and when they open it, the lenders will talk about what exactly these bids contain. But we'll know who is the highest bidder in this. But it's fair to expect that since Bhushan Steel got such a decent value, SR Steel is likely to get something in the same. And
it's also about, what the interests are, right? I mean, for instance, hypothetically, if Arcelor is bidding for SR Steel, they've exited Uttam Galva. This is probably their best chance at an India exposure. Will that get built into the bid? New Metal, assuming that, there's some interest from the Ruia family and they want to have some say in SR Steel, maybe they would bid built on the asset value that they think plus on what it means to them. I don't know. I mean, I assume some of that will get
bid in. Surely that's going to play into this because, for New Metal as well as ArcelorMittal is sort of their last bet on the steel game through this insolvency thing.
All right. Good stuff, Vishna. Thanks so much for joining us this morning. That's the steel bidding landscape.
Yeah. Now, 2 or 3 other top pieces of news. Firstly, the telecom space. Reliance Jio continues to give incumbent telecom operators a run for their money because subscriber data released by TRAI, or the Telecom Regulatory Authority of India, shows that the new entrant continues to win over more customers. Somit Sarkar is standing by to tell us how each of the players fared in December and how the market share picture looked at the end of 2017. Good morning, Somit.
Good morning, Neeraj. So if you see in the month of December, the telecom sector has added subscribers on a net basis. They have added close to 50 lakh subscribers for the month of December, and this is for the first time in the second half of financial year 2018. Now, earlier on a net basis, the industry witnessed a fall in subscribers. It started in July where it recorded a fall of around 51,000, then followed by 9.5 lakh, then 28 lakh, then 48 lakh, and then it fell in the most in November 2017 by 1.57 crore subscribers, and now in December it has increased by close to 50 lakh subscribers. Now this fall was due to SIM consolidation, that is the fall in multi-user SIMs, and which took place because of consolidation in the service provider space and because of cheap bundle plans. Now if you see Among the top 4 players, that is Bharti Airtel, Vodafone India, Idea Cellular and Jio, it was yet again Reliance Jio which added the most number of subscribers. Now, Reliance Jio added close to 80 lakh subscribers in the month of December, while Bharti Airtel added just close to 6 lakh, Vodafone around 15 lakhs and Idea Cellular around 24 lakh in the month of December. Now, this was Jio's best performance in terms of subscriber addition in the last 10 months. Now, if you see, in this month it has added around 80 lakh, and in February it had added close to 1.2 crore subscribers. Since then it was a bit subdued. Now, if you see in the third quarter financial year 2018, that is October, November and December, this has picked up. It recorded a subscriber addition of close to 70 lakhs here, then close to 60 lakhs here, and then now again 80 lakhs in the month of December. Now, this could be because of the Jio phone that has been launched by Reliance Jio. Also, the current data released by TRAI addresses the concerns of Jio being used as a second SIM. Now, the active subscriber data released by the TRAI shows that 83% of the users of Reliance Jio are active on the network. Now, though this number is still below what the bigger players have, now bigger players have an active subscriber of close to 100% to around 97%. Now, though this number is lower than what bigger players have, it is still it has still been on a rising trend. From its low of around 71.19% in April 2017, it has increased to 83% as of December 2017. So now let's see what the other players are doing. Well, they have been trying to protect largely their customer market share. Now, as of December ended quarter, Reliance Jio's customer market share stands at around 14%, while that of Bharti Airtel, Vodafone India and Idea Cellular is largely unchanged. Now, in August 2016, that is before Reliance Jio launched, Bharti Airtel had a customer market share of close to 25%, while as of December 2017, it has the same market share. Similar is the case with Vodafone and Idea. Now, so that shows clearly how Reliance Jio has been able to add most of the customers from the smaller players and from the new players that have come in the industry. Also, this subscriber addition problem is going to continue going forward, because Tata Teleservices, Aircel, Telenor and Reliance Communication, that are the smaller players, currently have close to 20 crore subscribers. That is what 17% of the total customer base in India. Now, of these 4 players, Tata Teleservices and Telenor have completely stopped their services, while Aircel has stopped their services in 6 circles, and Reliance Communication has sold all its asset and is currently operating as a virtual network operator. So this players could also be grabbed by Reliance Jio and the top players. So this is what it stands at for the December ended quarter.
Wow, this is interesting data, Soumit, and this could well mean that for the first 6 months or 12 months of this current calendar as well, the number additions for Jio continue to look strong, not necessarily at the expense of the incumbents. Some of the newer or smaller players will lose out their customers to Jio.
In fact, in the last 16 months, that has been the case. They have been mostly taking customers from the smaller players, that is Tata Teleservices, Telenor, Aircel, some from MTNL also, and then there is Reliance Communication. But let's see how it goes going forward, because this is what these guys still have, and they should shift towards the larger player because of the cheap bundle plans. So let's see how it works.
And the numbers continue to look impressive for Jio for sure. Soumit, thanks for putting that into perspective. Not that it has an immediate and a telling effect on the stock price of Reliance Industries, but this is very interesting data that comes in almost month after month from the telecom space. On to the other big story, and that is Religare Enterprises. It's attempting to put its house back in order, in their own words, by the way, after Malvinder and Shivinder Singh stepped down from the board following allegations that they siphoned off funds from the company. Now, Religare has constituted a new board. They've also announced a fundraising plan. Jatin is standing by with a timeline of all that transpired to Religare Enterprises. And, well, who's in charge now? Jatin, good morning. Who's in charge?
Neeraj, good morning. It is very interesting to see how really the charge changes because over the weekend we had significant news coming in. Remember, on 14th of February, the Singh brothers resigned from the board. Of course, it was followed by a couple of restructuring exercises which the new board plans. Now, if you look at it from the current standpoint, we have the board, which first of all has approved raising funds to the tune of 1,200 crore rupees. Of course, this 1,200 crores will be a mix of debt and equity. And more interestingly is what we want to point out is the kind of reconstitution of board which has happened. Remember, a few months back, we had the chairperson as well as a lot of non-executive directors resigning from the board of Religare. And after the Singh brothers also resigned, we had a lot of board seats which were vacant. So we have few players, including Vikram Talwar, who worked for Bank of America Merrill Lynch for nearly 3 decades. He has come in, on the board. Vijaya Bhaskar, he will be the chairman of the audit committee. He's a retired executive director of the Reserve Bank of India previously. Now, Siddharth Mehta and Ashok Mehta, these are the two people probably who will run the show as far as the, Religare Enterprise is concerned, after the Singh brothers have resigned. In fact, Siddharth Mehta was the director of Bay Capital, and probably now with the expertise that he had in the financial services business, he could use that probably in reshaping Religare Enterprises 2.0. And Ashok Mehta, as I was mentioning, he's appointed as the interim CEO till the time board finds a suitable, CEO for Religare Enterprises. He was an independent director in the company since January 2018. Now, why this entire thing was triggered. Number one is that the current market capitalization of Religare Enterprises is close to 1,074 crores, and the total proposed infusion is 1,200 crores, something similar to what their total outstanding liabilities are. Of course, the liabilities can be more or less depending on what really the audit committee finds out. But we have the latest disclosure which indicate that the promoter holding, which is the holding company of the Singh brothers, the holding is now merely 3.5% as per the latest disclosure on 7th of February this month, and it dropped from a level of 51% in June 2017. So in a period of 6-7 months, the holding for the Singh brothers has really come down significantly. This is largely to do with the sale of pledged shares by various financial institutions of the promoter entities, and probably this change has come in on the board side as well as on the fund infusion side. Probably we'll have the cleaning up of books happening, post which probably the management could run Religare Enterprises 2.0 much more successfully.
Well, certainly hopes that happens. The market has been pricing in some positive news for Religare. Remember, from the lows of February on the 2nd of Feb, the stock is up about 50%. 2 or 3 developments have happened. Let's see if this indeed shores up the business prospects for Religare. The results have anyway shown that the numbers of late, or the last 12 months at least, if not more, haven't been particularly spectacular. Let's see if this changes the tone for Religare somewhere down the line in FY19. But we cannot end the first word without addressing PNB, Ira. Yeah,
I think a whole bunch of developments over the weekend as well. So we're just bringing you up to speed, telling you what all has happened. All of this on BloombergQuint.com, of course. Firstly, we saw the first arrests in the PNB case. So the 2 PNB officials who were named in the original complaint have been arrested by the CBI. Along with them, the authorized signatory for the Nirav Modi company has also been arrested. So you've seen the first arrest. Questioning is underway, and some newspapers reporting that they have named a whole bunch of other officials who may have been aware of what was going on in this particular case. A fresh FIR has been filed against Mehul Choksi. Mehul Choksi is also abroad, but it is now very clear that there is some involvement, or at least some association of the Mehul Choksi companies with this whole case. Whether it's specifically with the 11,400 crore fraud at PNB linked to LOUs or not is not clear yet. It could simply be exposure that banks have in terms of general lending into the Mehul Choksi companies, but the investigations have expanded to his group as well. There have been claims coming in from the Enforcement Directorate that they have managed to get access to properties and goods worth 5,674 crore. Again, not easy to verify those numbers and to understand what exactly will get realized and how it will then get divvied up between the various banks that have claims. The investigation seems to be moving into shell companies linked to Nirav Modi as well. So it looks like more than 150 shell companies have been identified, and their financials and their dealings with various lenders are being investigated as well. There is also news coming in that City Union Bank has disclosed 3 fraudulent LOUs worth about 12.8 crore. This is unlinked to what has happened in PNB, but the reason I'm bringing it up is that perhaps there is a bigger issue, not perhaps, there is clearly a bigger issue with this LOU structure, which is letters of understanding based on which short-term buyer's credit seems to be given out by overseas branches of Indian banks and by foreign banks. So important to pull that comment in as well. Final thing I want to flag off, late on Friday evening, we got a statement statement from the Reserve Bank of India, putting it out for two reasons. One, of course, they said, as they would, that they are looking into what has exactly happened. The fraud in PNB is a case of operational lists, the Reserve Bank of India said, could be on account of delinquent behavior on the part of one or two employees. The RBI has undertaken a supervisory assessment of the control systems in PNB and will take adequate supervisory action. That is, the generic sort of boilerplate statement that they put out on the fraud. But the one thing that they clarified, and this is important both for PNB and for other banks, but mostly for PNB, they said that there have been reports suggesting that the RBI has directed PNB to meet its commitments under the LOU to other banks immediately. The RBI denies having given such instructions. The reason the RBI is putting that out is because there was some concern near that if PNB has to make good on the entire 11,000 crore immediately, there would be liquidity concerns that could emerge at the bank. And I think other banks were putting out information saying that, look, we are fine because we are going to get this money back immediately. The RBI does not act in that way. And I think this we said even on Thursday when we were discussing it, they will take cognizance of what is happening, they will investigate, they will see where the wrongdoing was, and then accordingly they will direct banks if required. But they made that clear mostly because there were concerns on what the impact on the liquidity condition for PNB would be if they have to make good on that 11,000 crore immediately. And
I think somehow, due to some sections of media reporting this, that RBI has instructed PNB to take up the entire claim. I think it was probably important as well, because I saw reports started saying that, we learned that this is happening and therefore this is the impact thereof. Good for the RBI to come in and clarify that.
They had to. With the bank, you can't take a chance, to have news swirling around which can potentially lead to without, sort of the liquidity crisis. And I'm not saying that, it would have led to a liquidity crisis, but any sudden demand of funds at banks can be detrimental for the health of the bank. So they're clarifying that, look, investigation will follow due process.
Okay, so that's, of course, all that you need to know about PNB until now. I believe this will be a consistent effort over the course of the next few days as well. Let's wait and watch what happens. But that's all that we have on First Word for the day today. But lots lined up on the show. We discuss markets and macros with Pradip Shah of IndAsia Fund Advisors, and decode the December quarter earnings with Aditya Narain of Edelweiss. Well, and also talk about maybe this PSU banking fraud as well. But all of that is coming up a bit later on the show. For now, we take a break and focus on the day's trade after this very quick break. Stay tuned.
आइसक्रीम खाएगी?
आइसक्रीम? ये है डबल आनंद। पहला आनंद पॉलिसी टर्म के अंत पर मैच्योरिटी क्लेम का पूरा भुगतान, और दूसरा आपके अपनों के लिए लाइफ कवर की पूरी रकम बिना किसी प्रीमियम के। LIC न्यू जीवन आनंद, आनंद ही आनंद।
सॉरी, आई एम लेट। क्या हुआ?
कुछ नहीं यार, जस्ट वर्किंग ऑन माई एक्सपेंशन प्लान।
फंडिंग का चक्कर।
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख। ला।
अरे।
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल।
हाँ।
NSE Emerge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
मीट मिसेस मेहता। इन्होंने नो रूम रेंट कैपिंग वाला ICICI लॉम्बार्ड कंप्लीट हेल्थ इंश्योरेंस नहीं लिया और जा पहुंची ब्रोकर बबलू के बिल्कुल बराबर में।
बर्बाद कर इसके। स्टील का बेच जल्दी। मैं इधर ने हरनिया का इलाज कराने आया हूँ। अगर तूने ये शेयर नहीं बेचा ने तो मेरे को बाईपास कराना पड़ेगा। अरे स्टील आउट, सीमेंट ये पेमेंट नहीं हो, सीमेंट डूबा। तेरे को ब्रोकर किसने बनाया?
रूम शेयरिंग की टेंशन नहीं, इंश्योरेंस लीजिए। ICICI लॉम्बार्ड कंप्लीट हेल्थ इंश्योरेंस देता है हेल्थ कवर के साथ साथ नो रूम रेंट कैपिंग का बेनिफिट भी, ताकि आपको मिले अपनी मर्जी का रूम और सुकून। ICICI लॉम्बार्ड कंप्लीट हेल्थ इंश्योरेंस, टेंशन नहीं, इंश्योरेंस लीजिए।
व्हाइट शर्ट्स कितने प्लेन और सिंपल। फॉग सेंट प्लेन और सिंपल व्हाइट शर्ट को बना दे स्पेशल और फैशनेबल। फॉग सेंट, न्यू फैशन वेयर फॉर मेन।
Welcome back. You're watching Indian Open right here on Bloomberg. Quint, pull up the SGX Nifty and the Asian markets as well. But pull up the SGX Nifty in particular. It shows that we'll have a flattish start. The rest of the Asian markets, Nikkei, for example, up about 1.33%. So that one is doing okay. Remember, the US markets will be shut on account of President's Day today. So the cues coming in from the world will be a lot lesser. We'll have our own course to manage in the session today. Not that we are not doing that. The whole of last week, we did pretty much that. The Dow went up about 4.3%. Our markets ended flat. In fact, the Nifty Bank ended about 1.25% lower. So what's been the action in our markets? Let's take a look at the derivative space. Navneet Saluja is standing by with the FNO setup for the morning. Good morning, Navneet.
Good morning, Neeraj. Well, we broke a very a crucial mark in Friday's session of 10,500. We not only broke that level, but we also closed below that mark. So let's see where the February series will actually expire. But 10,500 was the level which a lot of analysts were talking about that we would be able to maintain it. So what happened on Friday? Nothing major on the Nifty futures front. However, the premium was nearly 1 point. Let's pull up the Bank Nifty futures. That's the one which is in action. We've seen a lot of correction owing to the weakness in the PSU banking space. So 5% higher. We did see some fresh short positions being built up for the Bank Nifty futures. Let's just pull up the India VIX. Higher volatility so far for the February series has been a concern for this market. So nothing major happened. Despite of markets falling nearly 1%, India VIX remained around the mark of 16.3. In terms of option strike, 10,500 was the mark which was quite critical. But look at this 10,600 call. That added a lot of open interest in Friday's session. Even the 10,500. Let's see if the expiry takes place in that range of 10,450 to about 10,600. In terms of institutions, the FIs so far have been selling in the cash segment, but some respite actually on the FNO side. We did see some build of long positions being built up, at least on the index options front. But on the index futures, once again, 2,445 contracts were added on the short side, and on the long side, almost 1,300 contracts. Let's just pull up the options data. On the call long side, there was a major addition of nearly 10,000 contracts, and even the put long also added nearly 6,000 contracts. In terms of stock futures, one stock which is entered into the FNO ban, and that's Fortis Healthcare. We did see the stock falling nearly 4% in Friday's session. Other than that, I'll be also watching out for Motherson Sumi, which has been pretty weak post its numbers. Motherson Sumi, in fact, on Friday's session did see a bit of open interest build up. These are the February futures. We've seen positions being rolled over for March futures, Dheeraj.
That's interesting. Navneet, what does this heavy build-up on the call option suggest, considering that we are very close to expiry as well?
Neeraj, that's been negated. You're talking about the 10,500, 600 call strike. So there was a heavy writing which was seen on the call strike, which means these are the short positions on both 10,600, even on the 10,500. I was talking about the support on the 10,500 strike because there were a lot of put open interest there. In fact, if you look at across the levels, 10,500 put is sitting with maximum OI addition. And for a change, put writers actually ran for cover on Friday, Neeraj, because there was unwinding scene, which clearly signifies ahead of expiry, there was some nervousness which was felt.
Yeah, so, that's the point that I was trying to think about, that maybe the existing positions on the 10,500 put strike might be high, but because we dipped late in the last half an hour, could we see further unwinding if indeed the pressure on the index continues? And therefore, does this heavy call writing that has come about in the 10,500, 10,600 clearly suggests that not just for the series but for the intermediate term, participants might believe that this is a bit of a top, because the template seems to have changed from a buy on dips or almost every time to a sell on rallies market. Short, but yes, a sell on rally.
That template, Neeraj, has definitely changed, and I'll say if we can close above the 10,500 strike, that's the time when you can see the call writers of this strike unwinding their position. And as you mentioned, the correction came in the last hour. Even this addition also came in. Major addition came in the last hour of trade on
for the call side.
Call side, yeah.
Yeah. So it'll be interesting to see. Let's see if the market indeed takes some strength out of the positive start today, or we continue to grind under pressure. Remember, the last few days, the start irrespective, we've only ended lower in trade. So that's the F&O setup for the day. Moving on, while we're talking about all the key numbers that came out from the telecom space and otherwise, what we did not talk about was aviation, because more than 11 million passengers traveled by air in January as well. But that might not be as impressive as it sounds, because Somit, as he breaks up the data, tells us how this month of January was compared to what the last 4 years, maybe, Somit, and not the best, I would presume.
Yeah, it's not the best, but it's still strong because it's a 20% growth rate. There's a passenger growth rate for the Jain month compared to last year was 20%, but it is still not the best. If you see in Jan 2015, that is 4 years back, it had grown at around 21%. Then in Jan 2016 by 23%, and in Jan 2017 by 25%, and now it is back to 20%. So it's a good start, but not the best that the industry has seen in the last 4 years. Now, if you see player-wise, IndiGo, which is the largest player in the industry with around close to 40% market share, saw a revival in its growth. And by revival, I mean the passenger growth rate matching that of industry growth rate. Now, in June 2017, IndiGo's passenger growth rate was close to 27%, while that of industry was 20%. Post that, the growth had slowed down. IndiGo was growing at a slower rate as compared to the industry. This was because of the plane issues that the company has faced. But now in Jan 2018, it has matched the industry rate of 20%. Now, let's see how has the passenger growth rate been for the other players. Now, for the larger players, that is SpiceJet, Air India and Jet Airways, the growth has been slow compared to that of industry. But for smaller players like Air Asia, Go Air and Vistara, it has been a very good growth rate. Air Asia has grown at around 71% compared to last year, Go Air at 39% and Vistara at 35%, while the bigger players like SpiceJet grew at 18%, again below the industry growth rate of 20%, Air India at 13% and Jet Airways, this is Jet Group, Jet Airways and Jetlight combined, it grew at 10%. Now, if you see the plant load factor, that is also the capacity utilization, it has increased for 4 players among the top 7 players. For IndiGo, Go Air, Vistara and IndiGo, it has fallen compared to last year. But for players like Air India, Jet Airways, Jetlight and SpiceJet, it has increased compared to the last year. Now, for Air India, it stood around 84.6% compared to 81.4% in the last year. For Jet at 88.7, SpiceJet again has managed to clock a 90% plus passenger load factor, and this is the 33rd consecutive month where the company has been able to do so. Go Air again has maintained a 90%, and this is the 3rd consecutive month where the company has been able to do a 90% passenger load factor. Now, if you see the plane issues that IndiGo has,
not just about load factors, I think IndiGo continues to have those engine issues.
Yes, it has continued to have those engine issues, and you can clearly see in this chart the cancellation rate for IndiGo has spiked up to 1.8% from lows. It was at a low of around 0.4% in the last 6 months, but again it has come up to 1.8%. In June, we had seen it has spiked to 3.3% because of the neo plane issues, and which has again come up, and because of that we can see here it has spiked up to 1.8%. And going forward in the month of Feb, this is expected to continue because the company had brought down 3 more planes in the month of Feb, and which also led to cancellation of flights. So this could go up again in the month of February.
Okay, many thanks for that, Somit. We'll watch out for some of these aviation counters as well. So not a bad start. People have been flying, maybe not at the same rate as maybe previous years, but 20% growth is not something that you would scoff at. And with crude coming off the way it has, is there merit for some bit of an upside? That remains to be seen. But you know, I think I was reflecting upon a conversation that we are having with one of the fundamental experts on Countdown last week. And they were making this point that while crude may have come off a little bit, companies like Jet Airways have priced their growth for maybe the next couple of years purely on earning multiples, with crude being very, very benign. If that is not the case, because crude is not so benign, is there a case for some bit of a downtick despite these numbers? That's the question, right?
That's right, Neeraj. In fact, in terms of earnings as well, I guess IndiGo reported good set of Q3 numbers, but I guess Jet was the one which took a beating. But let's not forget the stock price of Jet has actually, we've seen a lot of appreciation in the last 3 to 4 months and posting a loss figure which was actually not in line with what the street was estimating. So I guess that was a major disappointment. But in terms of stock price movement, Jet Airways, as we can see in the last 3 months, it has given, still it stayed trading in the positive territory and given you returns of nearly 7%. But that's about the aviation space. I guess there will be a lot more stocks which will be in focus in today's trading session. I think it's time for us to head across to our research team and find out, Neeraj, which basically the stocks. And I think there are a lot of brokerages report also which has come out. Let's see if those sectors also react today. Be it, there's a report from Deutsche for the consumer space and also in the tire space. Yeah, so let's wait in. Let's get in our research team into all of that. Shraddha will, of course, bring us up to speed with all the stocks in news. And Agam and Nikki have the respective thoughts on the tire space and the consumer space as well. All three of you, good morning. I just want to actually just take a quick detour and start off with Nikki. A quick perspective, Nikki, on Tata Steel and Bhushan Steel. The amounts, what do market participants say? What does it augur for Bhushan Steel?
Okay, so if Tata Steel acquires both, as the bid suggests that it's the top bidder right now with the aggressive bidding, then it will complete the mark of 26 MTPA, which it was the target was for 2024. Right now, it's sitting at a capacity of 13. Will further augment that to 18 with the given expansion plan it has. And Bhushan Steel and Power has a capacity of 5.6 MTPA in Odisha, and 3 is for Bhushan Steel. So combined to that, you put up the MAC 18 plus 8. You will get this 26.5, which is what the target is that the company is looking. That is obviously something which we'll keep an eye out, because given the top race between JSW Steel and Tata Steel, so it will be interesting to watch if within a year or two that the company is able to scale up the capacity given the demand scenario right now. Yeah, the amounts for Bhushan Steel as well should be interesting. So we'll watch out for both of these stocks today. Shraddha, what else should we be watching out for? Neeraj, a couple of smaller names, of course, starting off with C3 Union Bank, which has said that they have suffered 3 fraudulent remittances. The amount is very small, about 12 or 13 crores, and remember, this is not linked to the PNB case, so watch out for that name. UCO Bank has admitted to an exposure of about 2,600 crores to the PNB fraud case, so you are hearing more and more names, banks coming out sharing their exposures. There's a TOI report which says that Singapore's GIC could buy 40% in Prestige Estates rental unit for about 1,400 crores, so do keep an eye out on Prestige Estates. Reliance unit will be acquiring 65% stake in Indian Film Combined for about 1,100 crores. They just want to expand the commercial and entertainment space in BKC, so that's the rationale. Power Grid has emerged as the lowest bidder for 1,000 crore transmission project. That's according to a PTI report. Natco Pharma's Mekaguda API unit has been cleared by the US FDA with 0 observations, so you might see some sentimental positive reaction. PVR says that they have amicably resolved their dispute with the Elan Group. Now, this was to do with development of multiplexes in Gurugram, and the stock had seen some negative hit on account of this, so that has been settled. Manipal Technologies has withdrawn the bankruptcy plea against Arcom. Don't know if we'll see any reaction on the back of that. PG Electroplast has said that its PU paint unit shop has gone into commercial production, and ARSS Infra, again a very smaller name, low volumes traded, but 121 crores order win, so we might see some reaction there. So what's that one standout name? It's a long list. What stands out? I would say Prestige Estates. Watch out for that on the back of the GIC investment report. Okay, so do watch out for Prestige Estates from amongst the stocks in news in the session today. Agam, what stands ahead for the consumer sector?
Right, so we have a Deutsche Bank report, and they're raising some concerns with respect to the kind of recovery that we've seen in recent times. And so Deutsche Bank actually met with the heads of some of these big companies, some of these big FMCG companies, and they've drawn some conclusions. So they do see that while there is improvement in sales trajectory, this is still lower than pre-demonetization levels as well as the implementation of GST. There is a recovery in the rural space which is underway. However, However, there's still issues with the wholesale channel, and this is likely to continue as we move into the next couple of quarters as well. The implementation of the EWA bill is likely to be another speed breaker, at least in the near term. Yet, when it comes to companies specifically, Deutsche Bank has suggested that the companies have started indicating a strong pipeline on new product launches, and soaps, detergents, and hair oil are certainly witnessing a shift towards the organized space. And on the back of that, we have Deutsche Bank, says that HUL and Marico stand to benefit the most, and their preferred picks then are HUL, ITC, Titan, Jubilant FoodWorks, Dabur, and Marico. So these are some of the FMCG companies that we'll be watching out for on the back of this report.
Okay, we will watch out. I'm surprised though, Agam, because post the quarter, I thought the commentary on rural from almost all the consumer companies was fairly positive.
Right. So again, the speed by which we have seen this increase was largely on account, to a certain extent, because of demonetization, low base, and there are still some challenges that a lot of these companies are grappling with respect to implementation of GST, and maybe the surge is not as much as one might expect, and it may take a few quarters more before things can come back into normalcy.
Okay, let's wait and watch for that. Thanks a lot for that, Agam. Sticking to reports, Nikki, what's this report on tires? Deutsche Bank seems to be perennially bullish, or at least bullish of late.
Yeah, because it's they've given a positive thesis on the premise of both synchronization of your recovery and volumes along with margin. Now, Q3 has been good enough for all the companies. They have indicated, the companies have indicated about the tight supply scenario, and however, the report suggests that the volume growth is expected to drive utilization and the pricing power for these companies. They expect a volume growth of good 8 to 12% per annum. Capacity utilization is expected to remain healthy for the next 3-4 quarters, although they do see some kind of uptick in raw material costs going forward in the Q1. However, in terms of the preference that they have, the truck-focused companies, MRF and Apollo, is something that the brokerage is going with right now.
Okay, thanks for that, Nikki. You just want to make a quick mention of the going-ons in Binani Cement as well?
So yeah, Dalmia has emerged as the top bidder for the company, a good sum of around 6,300 crore. This will help the company get into foray into North market in isolation. Now, Dalmia Bharat has a 25 MTPA capacity. It's present in East with 9.3, 12.1 capacity in South, and good 3.6 MTPA capacity that is sitting in Northeast. With this, if the company manages to, as it's emerged the front runner in terms of the acquisition of this asset, it will further foray into North, which is a landlocked region in terms of the limestone, which is obviously going to be auguring well for the stock.
Well, let's wait and watch. Dalmia Bharat is the key one. Remember, I think Dalmia and Shree, probably two companies that have really created wealth, and they are now expanding capacities in a meaningful way, both of them. Thanks a lot, Nikki, Shraddha, as well as Agam, for getting us up to speed with all of those stocks in news. So there you have it, the key stocks in news. Navneet, I know the technicals remain in focus too, but I think it'll be important to see the kind of reaction that we have into each of these names as well.
That's right, Neeraj. In fact, technicals will be extremely important in today's session. Let's see if we can maintain the level of at least 10,450 in today's trading session. Let's get our technical experts on board and get their view how they see the market opening today. We're joined by Meghana Malkan, author and trading coach at Malkan's View, and also joining us on the show is Ruchit Jain, technical analyst at Angel Broking. Good morning to both of you, and thanks a lot for joining us today on Bloomberg Quinn. Ruchit, let me come to you first. A closing below 10,500 was definitely not a good sign for the markets. This is also the expiry week, so we can expect more volatility coming by. SGX Nifty is suggesting a stable opening with an uptick of nearly 11 points. What would you do if the index opens in the green today?
A very good morning, Navneet. Yes, definitely Friday's session was not that encouraging, because from the higher end we saw a good selling coming off throughout the session. If you see the positional charts, what has happened in February series, that during initial part of the February series, first 10 days we saw a price correction in the Nifty index, wherein the index moved from 11,200 to about 10,300, 350 kind of levels. And during last entire week, it was more of a time correction, wherein the index has stayed sideways, and we had seen more stock specific opportunities. So this entire time correction or consolidation which we are talking about during entire last week, which we had seen, the lower end of that is placed around 10,398, and the higher end is placed around 10,620. So going ahead for the expiry week, these 2 points would be very pivotal for deciding that where would the expiry be or where would the short-term directional move be. Once the index breaches below 10,398, then I think this selling would get accelerated, and we could see immediately levels around 200-day moving average, which is around 10,100 levels. So I think if one has to trade the index, then as of now one should wait for a breakdown below 10,398. Below 10,398, initiate short positions for target around 10,100.
Meghana, good morning. Neeraj here. How are you approaching trade on the indices today?
Good morning, Neeraj. The way we ended last week, I would say more on the candle pattern and the momentum. What I see on the charts coming is that the low wouldn't break easily. So ideally, what I'm looking at right now for this opening is a gap up or something which does not really go very near to the lows that we've created on Friday. So these are very good supports. Should we have a bounce from here, I see them go both really bouncing up to their means, respective Nifty and Bank Nifty. So I'm looking for a positive with these both the indices with a positive opening on Monday itself.
Okay, so Meghana is expecting a positive opening, which the SGX Nifty definitely suggests. But the important thing is whether we can maintain those opening levels, which has not been the case, at least in the last few sessions. That's the view on the index. But let's also chat about individual stock strategies. Ruchit, I'll come to you. Which are the stocks where you have some strategies for today's session?
I have a sell call in Diwan Housing Finance. The prime reason, if we see the positional charts and the entire 2017, whenever the prices have shown correction in this stock, the 89 EMA on the daily chart was acting as a very good support. Prices corrected up to 89 EMA, then again resumed its uptrend. Now, what has happened during this correction of last 1 month, we have seen that the prices have gone below 89 EMA, and when the bounce back has come, along with the markets, and during this bounce back, that 89 EMA, which was the earlier the support, is now acting as a resistance. So usually when supports becomes resistance for short term, that's definitely a negative sign. So I think in near term, this stock is unlikely to go much above the recent high of 575, 580. So on minor bounce, if we get this stock between 545 to 548 in today's trading session, my recommendation would be to go short. Keep a stop loss above 565, and we could see targets around 510 in very short term. My second call would be a buy call in Bharti Airtel. Yes, we have not seen any good momentum in the stock in last 1.5 months. But if I see the monthly charts, then the stock on the monthly charts is looking quite attractive. About 4 to 5 months ago, we had seen a breakout from 8 years of consolidation phase in this stock, and the breakout was somewhere placed around 420 to 440 range. Now, after that breakout, the prices rallied and again has corrected in last couple of months. Prices are now trading near those breakout levels, so the risk-reward ratio is very much favorable to go long in at current levels. Not from a very short-term trading perspective, but also I think if one has a horizon of next 6 months to 1 year, then I think this stock could give, definitely amongst the large cap stock, this could be one of the outperformer. So for short-term, my recommendation would be to go long in Bharti Airtel, keeping stop loss below 400 and expecting target around 440.
Meghana, what about you?
Well, to me, I think Scott's Motors looks good. If you see the longer term trend, in spite of what's been happening in the last 15 days, the stock has maintained about its 20-period moving average on the daily chart. On the higher time frame chart, we've seen the trend maintain its consistency. Momentum is good, and volume on the lower side of the trend when you have these retracements are really low. So Scott's is something which should be the ideal pick should the markets bounce from here. You can buy with a stop of 860. And the immediate target that I see on the stock is 920. And the second one that I like is Ambuja Cement. I like the stock because it's formed very good support at the momentum after the fall. There are multiple divergences at the bottom. Volume supports the whole consolidation at the bottom. So I see this as a very low risk reward trade where you have the stop loss is at the minimum and the reward could be good should it take support from here. So that calls for a low risk reward buy with a stop of 254 for a target of 270.
Interesting. So those are a couple of ideas. Stay on, lots more to talk about, but time for our special segment Bloomberg Edge, wherein today Soumit Sarkar joins in with a trend that the terminal has thrown up on the stock of BPCL. Soumit, why BPCL? What is the terminal saying?
So the terminal's MACD indicator, that is the moving average convergence divergence indicator, has shown a sell signal on BPCL. Now what is MACD? Now MACD is a momentum indicator showing a relationship between two moving averages. Now it plots two lines, that is the MACD line and the signal line, and it helps to identify turning points in a trend. Now whenever the MACD line goes below the signal line, it's a sell signal, and when it goes above the signal line, it is a buy signal. So you can see clearly in the chart, now in the past, whenever the green line, that is the MACD line, has gone below the signal line, the stock has fallen. You can clearly see it here also. The MACD line has gone below the signal line and the stock has shown a big fall. And currently, if you see, if you can zoom in this part, the MACD line has inched below the signal line, thereby indicating a sell signal on BPCL.
Samit, have you by any chance been able to verify the efficacy of this indicator?
Yeah, backtesting this data for the last 1 year shows that if anyone would have bought or sold shares based on this indicator, then it would have given returns in excess of 30% to that investor.
30%. Wow. Okay. Thanks a lot for that, Samit. So that's the signal that the terminal is throwing up on BPCL. OMCs have looked iffy in the recent past. Meghana, any thoughts here? BPCL individually or maybe any of the three names?
Yes, BPCL, I do see it at a good support, simply because at the phase that it's in right now, at the price level, in all three time frame charts, if it's the daily, weekly as well as monthly, there's very good support right now. It calls for a very low risk reward trade. Candlestick pattern in particular, if you see last week's patterns, emerging of the last three candle pattern, gives a good support and a good reversal pattern formation. I would wait for its confirmation in this week. If it does confirm, then the next target that I see on the stock is 485 from here. So that is a good low risk buy that I see.
Okay, so that's the technical view coming in on BPCL. But one space which saw a bit of strength, or let's say which was bucking the trend on Friday's session, was the IT pack. Though the Nifty IT gave up its gains in the last hour of trade when the markets turned weak, there were stocks like Mindtree and Infosys. They managed to close the day in the green. Ruchit, I'll come to you. Any trade that you see in the IT space, and especially for stocks which managed to close the day in the green, like Infosys as well as Mindtree?
Yeah, so although during this last couple of weeks, although even Nifty IT index has corrected along with the broader markets, but we could clearly see an outperformance in the fall too. The fall has been much lower than what we have seen in some other indices with much of the heavyweights in Nifty. So I think this sector would continue to outperform to outperform in near term, irrespective of the market move. What stocks which we like from this sector is, one is Infosys. We have seen the recent correction taking place near its previous support, previous resistance which was broken. So I think the downside seems to be very limited in Infosys. Even on the early chart, the 200 hours moving average is playing a good support for the stock. On the higher side, we could see the stock again gaining momentum and rallying up to 1180, 1185 kind of levels. From the mid-cap space, Persistent is one of the stock from the IT space which we think that in near term could show good outperformance. On the weekly and the monthly charts, the stock has recently given a breakout, and post breakout the volumes have increased significantly. And when you see here such huge volumes, considering a breakout on the weekly or the monthly charts, that usually says that the medium to long term trend for such stock is quite positive. I think any kind of minor declines, if the stock comes around 750, 740 range, that would be a very good opportunity to buy Persistent. So Infosys and Persistent are the two names from the IT space which we believe that are good buying opportunities.
You know, it's interesting. Persistent, I was looking at the Morgan Stanley note, which came out post the numbers of Persistent Systems. It's a stock that's really failed to deliver, to be honest, as a stock individually. Morgan Stanley, though, was very enthused by the commentary that the management has given post the numbers. They talk about at least a double-digit growth in FY19 as well. And Morgan Stanley believes all of that, coupled with the green shoots or certain deals that could get signed in Q4 of the current financial as well, could lead to the stock doing extremely well in the medium term. Their target is northwards of 1,000 rupees per share on Persistent Systems. So, and look at that. You know, I was talking about how Persistent has failed to deliver as a stock compared to the others. I mean, pick up any name: Sonata Software, Mindtree, KPIT, Nucleus Software. Compared with Persistent, Persistent hasn't really had a run compared to the others. It'll be interesting to see if it can manage to do that and change that scenario over the course of the next 12 months, maybe in the near term, as Ruchit is saying, the volumes and the chart look interesting for some more upside for persistent systems. You know, the other news that caught my eye, Navneet, and typically in a roaring bull market, the stocks would have reacted, but apparently GVK has gotten very stiff deadlines to complete phase 1 of the Navi Mumbai airport, and if that is due to happen, the impact it can have on infrastructure around, and therefore on the stock prices of the 2 or 3 names, Jacob, Skill Infra, Reliance Industrial Infra. On a normal day, if the market would have been high 50, 100 points, the Nifty that is, you would have expected some reactions thereof. I don't know what will happen today to all of these, but yesterday was that big bang Bhumi Pujan of sorts for the Navi Mumbai airport. Let's see if these stocks catch the fancy of traders.
Let's hope it gets operational soon.
Yeah, from a Mumbai perspective, yes.
We've been talking about the Navi Mumbai airport for years now, Neeraj.
Yeah, so well, hopefully it happens. But from a stock perspective, I was just wondering if these stocks could react a bit in the session today. But also interesting will be what happens to Bhushan Steel, Tata Steel.
Yes,
today.
I think that's going to be the key stock that's going to be in focus. In fact, I think it's been a very, very aggressive bid. Nobody expected Tata Steel to bid as much as they bid for. That's what the Bloomberg exclusive story is saying, 45,000 crore. I think the main question now remains, and I think we'll ask our analyst also, is there any equity value that is left? Because till now, the expectation was that there will be more of the bidding may not be that aggressive, which meant there could be more equity value that could be left in the stock. But at these levels, I guess Bhushan Steel's come from 100 to now it's trading somewhere about 40, 45 levels.
Yeah, should be interesting to see what happens to this stock in the session today. We'll actually talk about Bhushan Steel, Tata Steel as well, SAIL. They're the stronger stocks on the other side of the pre-open session, because the pre-open session rates about to kick in. 20 seconds to go for the pre-open rates to kick in. So let's quickly bring you up to speed with what's happening in the rest of the world. Well, the limited world that we see, Nikkei is pointing towards a good start for itself. The SGX Nifty pointing towards a flat start for itself. So we'll probably have a start which is in and around the closing levels that we had in Friday's session, and let's see where we move on from there. Remember, it promises to be a volatile week because of being an expiry week, so it should be interesting to see how the trade shapes up too. The first rates, well and truly high. Let's see if these indeed turn out to be the rates. Can't not talk about PNB at the start, and then we'll talk about the others, but should bring up PNB and another 3% downtick. Well, you know, it's difficult to say whether this will be the rate or no on PNB. It's had a bit of a correction. There's no saying that this will not continue. I don't know how many people would be enthused to go out and buy a stock because it's fallen so much in the wake of all that's happening. So absence of buyers might just well trigger some further corrections in PNB. Bring up the other Nifty 50 names and just see what's happening there. Tata Steel should come up on your screen. That's a stock in focus. Maybe Bhushan Steel is a stock in focus, but Tata Steel too should come up on your screen. About 1.5%. They desperately, at least analysts believe that Tata Steel will desperately need Bhushan Steel's assets to keep the thing in the eastern region of India. They've gotten that. I don't know if there will be a 20% uptick on Bhushan Steel or no, but because the bids are aggressive, you would probably believe that there could be an upside potential to Bhushan Steel in the session today. Let's wait and watch what happens thereof. Amongst others, just before I hand it over to Navneet, just looking at what's moving around. Sun Pharma showing some upticks. Let's see if these last. TCS showing some uptick. Let's see if that lasts. And some bit of revival for Eicher Motors, 27650. It's a stock that's off about 15-17% from its recent highs, starting off about 1% higher in the session today.
Well, let's see how the stocks reacting which are in focus. Let's just pull up Natco Pharma. Remember, that's the counter which will be in focus as US FDA has completed its inspection of one of the plants. So Natco Pharma showing an uptick of 20%. Let's see if actually we can see an upper circuit on that stock going on. Pull up Power Grid and see how that's reacting in the pre-opening rates, as the company has emerged as the lowest bidder for its 1,000 crore transmission project. So a mild bit of green for Power Grid, but I guess the other stocks that's going to be in focus will be a Prestige Estates, because GIC, Singapore GIC may buy 40% in the company's rental unit for almost 1,400 crore. Remember, that's a TUI story. Prestige Estates is showing an uptick of nearly 2%. So right now, Neeraj, I think the pre-opening levels are okay, but I think they're going to settle somewhere around 908 or something. That's where we can get to know stocks like Bhushan and the others which are showing an uptick of nearly 20%, whether we can see an opening around those levels or not.
I should pull up the currency as well in the session, and the currency markets of course shut today. Excuse me for that, but Yeah, well, maybe remain stocks focused and just look at all those rates and how they are panning out. While we wait for the rates to settle down, it's important to get in some other newsmakers as well. Sumit Sarkar is, of course, standing by with the big brokerage calls for the morning. Sumit.
Good morning, Neeraj. On the big brokerage calls for the day, first we have is Nomura on Glenmark Pharmaceuticals. Now, the company has maintained its buy rating on the stock, but have cut the target price to 825 from 880. But this target price still suggests a potential upside of 56%. Now, the brokerage is disappointed by the delay in approval of the key drugs and out-licensing deal for Glenmark Pharmaceuticals. However, the brokerage says that the current opportunities for the drug are intact, but a further delay could carries the risk of competition coming in for Glenmark Pharmaceuticals. Now, the brokerage has cut the earnings estimate by 4%, 17% and 23% for FY 18, 19 and 20, and says that an early approval would represent an earnings upside to this earnings estimate. Lastly, it says that the current valuations of Glenmark is supported by the strong domestic formulation business that the company has. Second, we have is Motilal Oswal on MCX. Now, the brokerage has maintained its buy rating on the stock with the target price of 1100 rupees. Now, this target price suggests a potential upside of 48%. Now, the brokerage says that the year-to-date volumes have been encouraging for MCX after a muted 2017. Now, the last 9 months of 2017 were volumes were very soft because of multiple issues like demonetization, GST and PMLA, which in turn also reduced the bullion volumes to nearly half. Now, going forward, the regulatory actions taken by SEBI will be supporting the volume uptick for MCX, and also the unified license is not expected to hurt the company according to the brokerage. Lastly, it expects the financials of MCX to remain largely stable on the back of the growth prospects that the company has.
Thanks a lot, Sumit, for bringing all those details. Interestingly, MCX, Neeraj, SEBI approved the universal exchange format, I guess, few months back, and you'll have National Stock Exchange and BSE too, pouring into commodities trading. And if I'm not mistaken, BSE has already started mock trading for commodities trading. I think important thing will be whether the volumes can shift from MCX to the other exchanges once they go live with commodities trading, which have longer trading hours, I guess.
Yeah, I mean, I don't know. I mean, traders that we speak to say that it's very sticky. So we are happy with NSE for the equities part, and we are happy with people who use NSE, that is, people who use BSE probably happy with BSE too. And people who use MCX say that we are fairly happy with the MCX trading platform. So switches might be difficult, but you never know. With the incentives and the ease of usage, if either of the exchanges manage to make a dent into the other, let's wait and watch if that happens or not. Well, let's see the stocks that are moving around. Remember, we were talking about how the steel space looked attractive. Ruchit, any thoughts here? Tata Steel sale. I'm throwing in a sale here too, though it's not a stock in news, but it's been a strong stock. And I'm also adding a Bhushan Steel if it's possible to give a chart check there.
Bhushan Steel, definitely this has been most underperformer stock within the sector, but we can see a bullish engulfing pattern has recently been formed near the lows of 39.40. So I think the downside in near term at least could be limited in the stock, and if the stock reacts positively on the news that you had just mentioned, then I think the stock in near term could also give a pullback up to maybe up to 65 kind of levels. I think in near term the downside in Bhushan Steel definitely seems to be very limited. Any long positions if traders or investors are having, then 39, which was the recent low, now should be a strict stop loss, because as far as this low of 39 is maintained, I think the bounce back could be very sharp in this stock. We are not that positive on Tata Steel from a very short-term perspective. The reason being that on the lower time frame charts, after a long period of time, a lower top has been formed. So I think in near term, the stock would continue to remain under pressure, or maybe consolidation phase in the range of 640 to 740. The prices are already trading near the higher end of this range. So I think the risk-reward ratio is not favorable to go create any long positions in Tata Steel. Rather, from this space, I would recommend, if anyone has to go long on the metal space or have a positive view, then JSW Steel would be one stock to watch out for. The prime reason is that even during the corrective move in the metal space which we had seen in last couple of weeks, this stock stood out and has shown a good outperformance. So I think in terms of outperformance, definitely in terms of rankings, JSW Steel would be on the top, and wherein even from current levels, I think the stock has potential to go up to 330, 335 kind of levels. So if one has to pick from the metal space, that it has to be JSW Steel.
Okay, so JSW Steel, according to Ruchit, technically is the top pick in the metal space. Remember, that can also react because that was also one of the contenders to bid for the Bhushan Steel plant, but it looks like as of now Tata Steel has emerged as the top winner. Meghana, I'll come to you. NATCO is showing a good uptick in the pre-opening rates. If you could do a chart check there, let's see if you can get the opening around the same levels which the pre-opening rates are suggesting, 5 or 6% higher. How are the charts looking?
Yes, Navneet, the chart definitely looks at support, but overall, if I technically, if I had to pick something, I would choose something stronger, simply because if you see the candle patterns, I do not see yet a bullish reversal pattern setting it right now on the weekly charts. I do not see the bounce in the volumes coming up that are essential to form a pull from the consolidation. Momentum still lies into the weaker zone on the lower time frame chart, though on the weekly chart the momentum is at a support, but the other evidences, when you consider the volatility, the volume, they do not support bottom formation as of yet. So I think I would guess I would wait a little more for it to come near the previous bottom, which was around 680 level. I think we could wait for another week or two to see some more consolidation around that bottom and then take a call whether this is a good support forming as of time being.
I think a couple of the PSU banks, Neeraj, in the pre-opening rates, if you could just pull up the Union Bank chart or Bank of India, I think both of them are suggesting a downtick of nearly between the range of 4 to 5%. Remember, Union Bank has also said it has exposure to the PNB fraud case of 11,400 crore rupees. Ruchit, Union Bank or Bank of India, on the charts, would you initiate a short position at the opening levels?
I think if one has to do it from an intraday perspective, then Union Bank can be shorted because the stock has already breached its medium-term supports during last week. And on the lower side, the stock seems now to be headed lower towards 108, 109 kind of levels. So from a very short-term perspective, yes, one can create short positions in Union Bank, keeping stop loss above 124 for target numbers placed around 108.
Remember, these are the stocks that fell a lot last week as well. Last week, some of the biggest losers included a Bank of India, IDBI Bank, a Union Bank and a Canara Bank, in addition to PNB, of course. And they are continuing on their sorry state in today's session too, almost all of them starting off weak. But, you know, you can guess why this would be the case. IDBI Bank is flat right now. Let's see, it may correct more. But you can guess why this would be the case. No large investor in his right mind, unless he's a big contrarian player, would come out and buy any of these PSU banks right now. Not until the dust settles. A clutch of names or a clutch of investors work on the basis of the print being visible, and unless the print is visible, we've seen multiple measures, as good as they are, fail to revive the animal spirits in the PSU banks, save for that one big move that we saw on the 25th of October. Post that, I don't think that any of the stocks have even nudged those levels. So I think investors would largely shy away from buying any of these PSU banks, and in light of all that's happening with the PNB case and others, well, some more downtick. By the way, I must point out that the news story that was doing the rounds of social media yesterday was the Rotomac Pens owners also fleeing. I think the ANI has put out a news bit saying that story is not true, and the guy is very much in India as well. Not to say that there is not a fraud, or maybe there is. We don't know really about it. But there's a lot of conflicting opinion out there floating on the social media pages. So be careful what you believe. Anyways, 4 minutes to go for trade. So trade to begin, let's tell you all that you need to know to stay ahead in the session today. UCO Bank exposure in PNB fraud case at 36 crore rupees. City Union Bank exposure at about 12 crore rupees. Union Bank amongst others that have also mentioned this. The stock starting off lower.
Religare Enterprises to raise up to 1,200 crore rupees by a combination of equity and debt. It has also constituted a new board as a part of its restructuring efforts.
Dalmia Consortium is set to bid over 6,300 crore rupees for Binani Cement, according to a Bloomberg report.
Singapore's GRC may buy 40% stake in Prestige Estates rental unit for 1,400 crore rupees, according to a Times of India report.
The US FDA completes inspection of Natco Pharma's Mekuguda API unit with zero observations, the stock starting off 5% higher.
And from the futures and options segment, Fortis Healthcare has entered into the F&O ban period for today's trade.
Well, down about 3% in the session today. Natco clearly looks to be the stock that will start off with the bang. Meghana, of course, mentioned that there is not enough candle patterns, I believe that's what she said, to justify or certify a significant uptick. But let's wait and watch what happens there. I think the stock that's bouncing back very, very well on the Nifty is ICICI Bank, 2.5% higher. It was amongst the top losers last week. But 329, up about 2.5%, a bounce back underway. Ruchit, would you play the bounce on ICICI?
This seems to be more of a consolidation phase for ICICI Bank. For entire last week, the prices have traded in the range of 340 to 316. So I think unless the stock gives a breakout either below 316 or above 340, there won't be any directional move in this stock. So I would rather avoid trading in this stock till I get a breakout.
Okay, what about you, Meghana? While we don't really look at individual banking stocks on the PSU side, what about the private banks?
Yes, none of them, especially most of them have had this type of pattern formation where on the top you've seen bearish patterns coming in. You've seen momentum really freezing out on the top. For example, in this case, when we discuss ICICI Bank, is the momentum as at a resistance now. The pattern is bearish. So even if this bank would have to bounce, I see multiple resistance coming in immediately. So as far as placing a very short-term trade, a day trade or a couple of days trade is okay for maybe say a rise of 5 to 6%, but going on the positional trade or swing trade, I would really not get into any of the private banks as of now.
Okay, that's the view on ICICI Bank. Let's get going and get you one topic from both our technical experts. Meghana, I'll come to you first. One topic for the day.
Yes, for the day, I think HCL Technology is something that I would pick at, considering how the IT markets had closed, IT space had closed on last week. I think HCL Technologies did really very well. I do see a bounce coming on that stock. So that is one stock that I could pick for the day.
What about you? What are you going to pick?
Bharti Airtel, I think I would go with that pick only, although the levels which I had earlier given were for a short term. If I have to play it for intraday, then 411 would be the stop loss for intraday basis, and I expect targets around 435 to 440.
Okay, so Bharti Airtel is the top pick from Ruchit, and that's a buy call. The counter is somewhere about levels of 420. Well, needed just 30 seconds for market to open, and it looks like a positive start.
Yeah, so we'll have a positive start for sure. I think the pre-open date suggested to the question mark is whether we can build on from there, or will we succumb to some bit of selling as we've seen the whole of last week. Banks, principally the reasons why this could happen. But let's wait and watch what happens there. Remember, it's not just about what happens to PSU banks individually. It's also the contagion effect that comes in as a result of one of the key lending sectors under such a big spate of problems. But this is what the markets are doing this Monday morning, starting off about 1/4% higher. The Nifty Bank about 1/3% higher. So that's actually leading the charge, maybe led by private banks. To be honest, I doubt that the PSU banks are really showing that uptick. And as we speak, the Nifty Bank too has come off. So good, bright start, just about coming off, now flattening out completely. The Nifty 50 about, well, almost moving towards breaking into the red really. It's flattened out completely within the first 1 minute itself. In fact, in the red, if I'm not wrong, unchanged, and now in the red, the Nifty Bank and the Sensex, similar fates too. Wonder what the broader markets are up to. Should come up on your screen, and a very, very flat start. No big cuts, but a flat start nevertheless. Let's bring up the heat map and see how is it. Even Stevens really. Tata Steel starting off about 2.5% lower. You probably presume markets didn't expect such an aggressive bid from Tata Steel for Bhushan Steel, but that's starting off lower. HCL Tech about 1.5% lower in trade. Well, if you indeed want to exercise Meghna's call, and if the stops are not hit, then maybe there's a good time to buy. Let's wait and watch there. And Axis Bank amongst others, which is starting off on the red. On the positive side, ICICI Bank is bouncing back. Kotak is carrying on from where it left off. HDFC has some gains to itself, but the quantum of red enveloping the screen much quicker and much faster than the quantum of green. Hardly any kind of red now, and now at the lowest point in the first 1 minute, about 1/3% lower. So it's not turned out to be a good start. Just want to bring up PNB on the screen before I get into other stocks. Just get Punjab National Bank on the screen and see what that one is doing in the session today. Another 3% off, 122. And so the saga continues. Well, I'm guessing the saga would be continuing for some of the other PSU banks as well. Maybe not for IDBI, but some of the others. IDBI showed some positive start in the pre-open, but no. All the PSU banks continue to slide, and Union Bank in particular 5% lower. They talk about the kind of exposure that they have to the PNB fraud case, and that stock is starting off 5% lower now at the lowest point and continuing to unravel. What else? Some positive news flow for Natco Pharma and Bhushan Steel. Bhushan Steel, Tata Steel emerges as the top bidder, and a high bid put in by Tata Steel that leads to some bit of an uptick for Bhushan Steel. So good going there. Wonder if Natco Pharma has gained in the session today. And in the pre-open rates, it was indicating a 5% uptick. now about a 3% uptick. So no observations, it's not a nod really, but no observations from the US FDA. That stock starting off 3% higher. Last but not the least, just want to see the stocks which are volatile last week. PC Jewellers was volatile. Gitanjali Gems was very, very volatile, down and out. And another 10% done in the session today for Gitanjali. Navneet, what else?
Well, Neeraj, definitely it's not a great start because we breached Friday's low of 10,434 and the index is inching very closer to the 10,400 mark. So let's see if that'll be breached again today. But Wakrangi is once again locked in upper circuit. I don't know which day is it, 5th or the 6th trading session. So that's up nearly 5%. Neeraj has already highlighted Natco Pharma, which is doing well. That's trading with gains of 3%. But I guess all the gains, considering the markets are turning weak, the stocks are also coming off. Indian Hotels is the other one, which is trading in the green if you look at the Nifty Mid-Cap Index. But Union Bank is down 5%. So that's your top loser in terms of the PSU banking space. PNB, further losses, 3% lower. And you've also got Bank of India. That's also seen cuts of nearly 2.5% so far as we speak in today's session. Stocks which were going up, Steel Authority, that's seen cuts of nearly 2% so far. And you've got Divi's Laboratories, that stock's down almost 1.5% in today's session. Let's just pull up Prestige Estates. These are the stocks which were in focus today as Singapore's GIC has bought 40% stake in one of the rental units. So at least that's trading in the positive. Power Grid, which emerged as the lowest bidder for 1,000 crore transmission project. Not much of gains actually. So it's flattened out, Neeraj, as the markets have turned weak. I think let's just pull up the advanced decline ratio. That's going to give a clear picture of the broader market now, what's happening, because definitely Nifty 50 is down, but the advanced decline ratio will tell you how much of the declines have come in against how much advances so far at the opening level. And there you go. The picture is clear. It's 2:1, almost in favor of the declines.
Not looking good. Let's just get in closing thoughts from our experts before we get in Pradip Shah on the show. Meghana, we're starting off about 1/3% lower. Is there a trade that you would initiate afresh on either the Nifty or the Nifty Bank? Actually, the Nifty Bank looks a lot more resilient than the Nifty.
Yes, yes, Neeraj. What's happening on the Bank Nifty is when we have this this whole bunch of supports in the bottom, I would still believe in taking a low risk reward trade at this point, because the bottom that was formed at 25,000, the panic bottom, I really do not see that breaking very easily in today's trade. I would still keep my hopes positive on this. I would try to initiate a long trade here with a stop below 25,000, maybe 50 to 70 points away on the downside, and would really wait for a bounce in the second half of the day.
Okay. What about you, Ruchit?
Well, I would be watching for this 10,398, which we had earlier spoken about. That is a very crucial level for this week, since it's an expiry week also. If the market goes and breaks the 10,398 on the lower side, then I would recommend creating fresh shorts for targets around 10,100 in this week itself.
Okay, Tata Steel is leading the pack of losers right now, 3.5% lower. Ruchit, Meghana, thank you so much for joining in today and giving us your thoughts and sharing your ideas with us as well. Do watch out for some of these names that both our experts spoke about in the session today. But let's get into fundamental voice on the show. Pradip Shah, Chairman at IndAsia Fund Advisors, joins us right now on the show. Mr. Shah, good morning. Thanks so much for joining in. It seems to be bursting at its seams, this whole valuation argument that was anyways at play. Now we have our own internal problems with this whole PSU banking mess that we seem to have created. Would you rather sit on the sidelines and wait for the events to unravel? Or are you being a braveheart and looking at valuations and stocks which may have come off a bit and deploying fresh money at work?
Well, I think firstly the tendency for the market as a whole should be towards selling pressure rather than buying opportunity, because while we have done very well in terms of demand, the demand has come back, the GST and demon issues are pretty much behind us. The results have been very good for the last quarter, for the December quarter, but the outlook has been a little bit affected by the budget, where the long-term capital gains tax came in, and that naturally would put a pressure till March 31st on everyone to look at their portfolio and to see what gains they should capture before the tax regime changes. In addition to, of course, the fundamentals. Now, in the fundamentals, one of the key things is the outlook for the BJP party in the forthcoming elections. We have 8 this year, and then next year central elections. There is also the concern that there might be preponement of the elections that are scheduled next year. And in order to capture the momentum that Modi clearly enjoys, Prime Minister Modi remains very popular, but many of his policies are disconnected from some of his statements, such as the ease of doing business, or, for instance, encouraging entrepreneurs and so on, that, or for instance, import duties on products that he's put in. Those are discouraging because while they protect the manufacturers in India, they discourage consumption. So this clearly leads to uncertainty. In addition, we have oil prices today now a little bit lower than the $70, but nevertheless much too high for our liking. Trade deficit was the highest we've seen. And so we will see some drift in the currency unless capital flows come in. And that we have seen the first signs. In February, we've had over 6,800 crores go out. After 13,700 crores came in January from FIIs, we have seen 6,800 crores go out. So clearly, everyone is not enthused about what is currently the situation. And so I would be very wary of buying unless there is some major correction in any individual script, which is fundamentally sound. And that's when somebody wants to sell and just walk away, that's a great opportunity to buy.
Pradip, we've already come off nearly 600 to 650 points in Nifty from the highs that one has seen, and you've said that you will be very in terms of buying at current level. Just want to know how much more correction can this market see, because there are concerns you've mentioned because of the budget, there are LTCJ issues, and obviously the sentiment is soured because of the PNB fraud case that one has seen in the last week.
Yes, so I think this sentiment has been definitely affected with the PNB being the latest issue. I think the greater possible effect on the sentiment will come from the election possibilities. Even if elections continue as scheduled, and there will always be uncertainty whether they'll be preponed or not, there is great fear that the BJP will not come out as well as it did last time. And that certainly will lead to jitters. As we come closer to election dates, we will see those jitters emerge. And I think, therefore, there will be selling pressure on those which have got a lot of froth in them, those which have done very well. We have seen multiples go beyond 15 consumer products companies. Are they justified? I'm not so sure. Companies are doing well, the brands are doing well, they're introducing new products, all that is fine, but will there be growth for an indefinite period to justify those kinds of multiples? No. Similarly, in other sectors we have seen in the automotive and so on, huge multiple run-ups over the last year and a half. Those have to be corrected to more normal multiples, partly from the sentiment change and partly from recognition that if there is a change in government, then growth might also be lower than what we all envisage just now.
Okay. Mr. Shah, the last time that we had you were talking about how the earnings picture at the mid-cap end of the market has looked very robust. You were referring to a weekend earning on Saturday wherein X percentage of the 300-odd companies that came out with the results was very strong. By and large, save for PSU banks, the earnings picture has looked very robust as well. Does that provide a downside cushion to what need not be a global market correction? If it's a global correction, then, well, all hell breaks loose. But if it's not a global correction, if we are coming down because of our own pressures, does the earnings provide a downside cushion? And if so, what pockets do you think would be on the minds of you as an investor based on the earnings season that has come out so far?
So I think there is definitely recognition that the performance of the companies, of most companies, has been much better than anticipated for the quarter ended December 31st. Will it continue? I think definitely this quarter, March quarter, perhaps up to June quarter, there will be momentum of pent-up demand. We had two decent monsoons. Last year's monsoon was very erratic, but it was still a decent monsoon. So there's a lot of money in the hands of farmers, and the demon stopped them from spending, and the GST created disruptions. That pent-up demand is getting reflected in the markets just now. So that momentum will continue, as I said, till June. Then again, the monsoon uncertainties will create some hiccups for markets, as well as, of course, the outlook for the economy as a whole if there is political uncertainty. If Prime Minister Modi, who's, I think the markets like him and his policies. If there is any fear that he will be handicapped with the elections, or he will be not as free as he has been in making policy decisions, there will be some consequences on the market. There is no escape from that, I think.
Pradip, I know you're staying away from buying at current levels, but any specific sector where you bullish on and you expect more correction to come by so that you can buy stocks at lower levels, which would be those sectors?
Well, I think one sector that has been hit badly is the pharmaceutical sector. As you know, we've seen consolidation in the US markets by buying agencies, and therefore they've been able to reduce prices, and their bargaining power is much greater than the bargaining power of our suppliers from India. So, but I think that sustainability of that bargaining power imbalance will not continue. I think the US will have to depend on quality suppliers from worldwide to bring down the healthcare costs, because the US budget, as you know, is going to run into a $4 trillion budget with a huge deficit that they forecast. They will need to control deficits where they can control through such means. And so I think there will be some recognition that they can buy some portion of their pharmaceutical needs from India and reduce their deficit. So to that extent, I think there will be a resurgence in buying interest from US companies and orders being placed on Indian companies that have demonstrated their ability to maintain good manufacturing practices, ability to serve their clients well, ability to stay out of controversy. So those will get benefits, and I have no doubt about it that there will be some recognition in the next 6 months. We will probably see it without doubt coming back. And the US market is really what props up a lot of our Indian companies that are export oriented. The domestic market is also good in the pharmaceutical sector. Most of these companies also have a domestic market, and that has been holding up. The Indian growth rates in the domestic market have been very, very good for the last several years. And naturally, as incomes increase, people will spend more on well-being and health rather than other matters first. So I think that sector to me looks good. I also feel comfortable with, for instance, the technology companies in India. Most of them are very well run. They understand that the client needs have changed, that they cannot be doing their business as usual as they were in the past. So they're trying to offer complete solutions, some with proprietary technology, some with getting the best of technology and offering a solution after understanding the domain of their client. And therefore, I think they will get business as going forward and much more, because there's continual change in technology, continual change in business models and tweaking of business models, and therefore they need to continually improve their systems. And so we have a very robust IT base to offer them that. So again, I would look at that. Again, that sector was beaten down, as you know, in the last year. It didn't rise as much with others when it did rise. But here, I think there may be an opportunity to look into individual companies in that sector.
Mr. Shah, one final question from mine at least. With an assumption that we do anywhere between 460 to 480 rupees EPS on the Nifty this time around, and with a healthy 15% growth, if we assume that for FY19, we're still trading at about 19 times FY19 earnings. That coupled with all the pressures due to the uncertainty to the political side of the equation in India and the possibility of faster rate hikes in the US, does it bring down the multiples by and large? So even if the earnings were to grow, if the P multiple by itself is due to come off due to the uncertainties both on the global and the local front, does it cap the upsides?
I think so. I think at this time there will be some recognition that the uncertainties for India are increasing for the reasons we mentioned earlier. And so that these multiples will have to be relooked at. Are they sustainable? Perhaps conservative people will take crop some gains and take advantage of it, not only for the tax reasons, but also because of the possibility that there might be a re-rating downwards because of the uncertainties materializing. So clearly there is some kind of cap that I see, but it's at the end of the day that market cap has to be translated into individual stock picks. And you might still find opportunities to buy in that market. You might find opportunities to, of course, sell the frothy, overpriced scripts and crop some money to recycle into the underpriced scripts. But that will be happening. And I think we are seeing even some of the liquidity flows that are coming into the Indian market will, be discerning investors, and they will say, look, does it make sense to invest in these markets, whether it's the mutual funds or individual investors. So I will say that there's definitely going to be some recognition that the market is a bit overpriced for the uncertainties that we have today.
Pradip, just a last question from my end. Last year, the markets were supported because of the domestic liquidity. Do you think domestic liquidity now in 2018, considering you've been talking about the political scenario, we've got 8 state elections which are lined up this year, is going to be as buoyant as it was in 2018? Can we expect that support once again in 2018 from domestic institutions?
So domestic liquidity going into financial instruments will continue. I think that demonetization part of it has helped in that process. Whether the same amount of money that went into equity funds and equities will continue at that level, I think there will be some recognition that there are other asset allocation opportunities for individuals and funds, such as, for instance, our bond markets or debt markets. And today, as you know, the debt market has moved up 7.6, 7.77, higher also the 10-year bond rate. So clearly the interest rates look more attractive than before. With inflation continuing at 5%, the real returns look attractive. So domestic money will also switch a little bit into debt funds from the earlier equity flows that we saw last year. And again, additionally, because of the tax burden that has been put on equity mutual funds also, the distribution tax, dividend tax. So clearly there is good reason for them to do a little bit of change in allocation and move towards more equity, more debt orientation.
Great. Mr. Shah, good having you. Thanks so much for taking the time out and joining us and speaking to us today. Look forward to having you more often on this forum.
My pleasure.
Well, as we speak, the markets are completely flat, but we need to slip into a quick break. Keep in mind, Tata Steel and Z are the stocks which are leading the charge downwards. And on the flip side, Bhushan Steel up 20%, Vakrangi up 5%, and GVK Power, interestingly, up 3.5% as well. The airport seems to finally being a reality. Maybe that is bringing some bit of excitement in the stock. Jacob Navneet is up 3% too, 167. So good going for those airport-related names. But we take a break, decode the December quarter earnings with Aditya Narain of Edelweiss Securities. He joins us on the other side.
job, अरे 5 to 9 job, भाग दौड़ all the time job, the roaming वाला job, the deadline वाला job, or are you living in the market वाला job?
Life is full of options. Choose a job and earn on your own terms. Choose to become an LIC agent. It's more than a job. It's career insurance. Be your own boss. Be an LIC agent. Ab life set hai.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much. They still don't know you after all these years? क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
दुबे जी मुंबई की बारिश देखने का शौक लेकर आए और लैंड करते ही फिसल गए. अब शहर में नए थे और इनके पास नो जोनल कोपे वाला ICICI लोम्बार्ड कंप्लीट हेल्थ इंश्योरेंस तो था नहीं.
हाँ, अब कहाँ करें?
हमारे शहर का बीमा का था 60,000 और यहाँ का खर्चा है 90,000। वापसी के पैसे भी नहीं बचे, जो था सब इस घुटने में घुस गया।
कौन घुसा?
आ गई।
कहाँ बोल रहे हो? कहाँ घुसे तुम? हेलो? अरे हेलो?
बड़ा शहर, बड़े खर्चे।
कितनी बार बोल, हमारी बात तो पूरी किया करो, तुम पूरी सुनते ही नहीं, सवाल जवाब कर रहे हैं, समझ में नहीं आ रहा है, बस हो गया, अब तुम आ जाओ भाग के यहाँ पर।
क्या बात कर रही हो भगवान, भाग के?
अरे तुम, हम बोल रहे हैं तुम यहाँ
दौड़ के कैसे वापस आ जाएं, घुटना टूट गया है।
बोले
अब जाओ और एफडी तोड़ो।
बड़े शहर के खर्चे की टेंशन नहीं, इंश्योरेंस लीजिए। ICICI लॉम्बार्ड कंप्लीट हेल्थ इंश्योरेंस देता है हेल्थ कवर के साथ नो जोनल कोपे का बेनिफिट, ताकि आप अगर दूसरे शहर में भी हों तो आपके ट्रीटमेंट में कोई कमी ना हो। ICICI लॉम्बार्ड कंप्लीट हेल्थ इंश्योरेंस, टेंशन नहीं, इंश्योरेंस लीजिए।
व्हाइट शर्ट्स कितने प्लेन और सिंपल, फॉक्सेंट प्लेन और सिंपल व्हाइट शर्ट को बना दे स्पेशल और फैशनेबल। फॉक्सेंट, न्यू फैशन वेयर फॉर मेन।
With IndianOpen right here on Bloomberg Quint. About 1/4% off for the benchmark indices. The Nifty Bank, well, actually not doing as bad as the Nifty. Though I wouldn't say the Nifty is doing too bad either, just about 1/3%. This could be just a start of any other normal day as well. Now, when the rest of the world is not giving us major cues, the US markets will be shut tonight, so won't have too many cues coming in from the global markets as well. We play to our own tunes. And amongst the key components of our own tunes is what we do in earnings. The third quarter earnings got over very, very recently. Most companies seem to have stuck to the script, though you would probably argue that the surprises came in at the fag end of the earnings season from the PSU banks, maybe a couple of auto companies, etc. But what does this tell us about what will happen in Q4, in FY19 as well? Is that elusive earnings recovery finally underway? Who better than Aditya Narain, the head of research at Edelweiss Securities, to talk about this and more. Aditya, thanks so much for speaking to us at Bloomberg. Really good having you. What did you make of Q3?
Well, in many senses, at the aggregate, they came in more or less in line with expectations. So I think to some extent that's a relief, because so far you've been tending to miss right through, right? So I think that in some senses is a relief and a form of comfort. The second bit is, I think, you're beginning to see, right, volume expansion and domestic consumption starting to show much, much more transaction. And that is, I think, very, very important, because it gives you a sense of the general health of the economy. I think on the investment side, you're still tending to see patchy numbers, but what you're beginning to see is the construction companies beginning to show much nicer order books. So I think that again tells you that at a recovery level, you are now seeing solid signs of an incipient recovery. It's not a full-blown recovery, but the signs that you're getting an incipient recovery, both on the, well, clearly on the consumption side, but a little bit on the investment side. I think that gives you a fair amount of comfort. That said, I think the big swings really have been earnings on the commodity side, which has really been the overall support for the earnings system, and there have been surprises on the banking side, which has brought down the overall averages. So that in any case is a little bit of a swing factor, is driven more by pricing and provisioning, and in this quarter with interest rates. So that's a balancing factor. But if you take that out, the rest of it does show a certain amount of health from a consumption perspective, from an incipient investment side, which I think is positive.
Okay. And I'll talk about each of these as well. Yeah. But first, the headline numbers, Aditya. Based on what we've done so far, I remember Q1 was a big disappointment. Q2, I think we reverted to mean. Q3, as you said, we've probably delivered what we expected. Where are we in the number estimates that you had for FY18? And what are you penciling in for FY19 in your broad estimates? Are you penciling in the earnings recovery, the incipient economy-facing recovery that you just spoke about, or is that out of the equation for FY19 at least?
Well, to some extent, we do start factoring in that incipient recovery. See, what has historically happened with Indian numbers is they've started at 20% at the beginning of the year, and they've all worn down, right? Now, this year, it is looking a little better.
It is?
It is looking a little better, because the first was weak, second was on par, third is on par, but above expectation, above, the 0% level, right? And I think this trend should by and large continue. The swings again will be at the absolute level. You will have these swings from the banking side because you don't know when provisioning will get capped out, whether it's going to be this quarter or it could stretch a little bit more. Likewise, on the commodities, it is a little hard to make that call on whether this kind of momentum will effectively continue. So that's why, as I said in my preface, I think the fact that the consumption side, that you're beginning to see volumes, and you can argue some levels on the investment side, I would tend to believe the numbers have not really changed for us at the aggregate for what we are looking at FY19. And, you know, surprisingly, or not so surprisingly, it is looking like a 20% number. But I think it is something that you can increasingly aspire for, because now you're getting pockets of growth which you didn't have. And those are based, as I said, not so much on price, but on volume, which is where the comfort tends to be.
Okay. So what are your numbers like for FY18? Are you anywhere, I mean, you would be anywhere between 450 to 500 for the Nifty?
We're at about 490.
490. Yeah. You think there's a fair chance that we'll hit that number?
I think we should. Okay. I mean, again, there is a variation as far as the banks are concerned, particularly how interest rates are playing. And, you know, you could well have a situation where rates come off and you have a certain amount of write back of all the pain that's been taken in this quarter. But that remains a little bit of a variable. But the numbers as we have post the quarter are 490 for this year and about 600 for FY19.
Yeah, with the 20% assumption, I thought 600 would be a...
Yeah, that's where you're basically looking.
So let's assume that's your base case scenario.
Yeah.
It is, right? If that is your base case scenario, would you be comfortable with the kind of valuations that we'll be trading at 600 for FY19? You would presume that we are not really in the terribly expensive zone. We are probably in the fair valuation zone.
I think so. I think so. And I think there are two parts to it. I think where are we in the valuation zone, firstly. Secondly, where are we in the recovery stage, and which determines valuations in many senses, because, you know, you can really argue for a much stronger growth effectively beyond that, right? And I think third is where are we on the overall economic cycle. You must remember that we've had 3, 4, 5 years now of restructuring that has actually gone on. When you get through that, you will inevitably, if external elements don't conspire against you, you can effectively get 3, 4, 5 years of decent and long growth. And I think we are very well positioned on that front.
Okay.
So given that you're where you are, I would argue that the market can basically trade at a higher levels rather than necessarily always be pegged to its mean. Right, the mean is formed of when you're trading at higher levels, and the average is when you're trading at lower levels, right? And I think this is a point in time where you will tend to trade at your higher levels, because you should have economic tailwind that can sustain for a bit. See, it's the stage of recovery also, right? And if you've got it right, then these are early stages of recovery, which will give you an extended run over a couple of years.
Yeah, but we don't always work in isolation, right? I mean, as much as we would want the global factors to not give us an unpleasant shock, we have to recognize that we are probably in an era wherein there's an outside chance, I'm not saying it's a certainty, I mean, probably nobody knows, there's an outside chance that the hikes in the US may be quicker and more than what anybody anticipates as well. What happens if that plays out and a couple of other factors plays out as well in terms of flows?
See, I think you have to look at two elements to it, right?
Sure.
One is the market element or the macro element. The other is the economic element. Okay, which is the growth element and what's happening to the underlying economy. If you were to look at the growth element or the economic element, we are actually lagging the broader world. Our economic recovery has been slower and lower, right, than what you're seeing across the world. So in some senses, that you have the cushion that even if you were to align the cycle, right, India actually has a certain amount of catch up to do, right? So I think that is very primary. Let's not always get caught up with the market element or the macro element or the level of rates element, right? But as far as the economy is concerned, economic growth and economic recovery is concerned, we are lagging. We have a certain amount of catch up to do, and therefore we have a certain amount of cushion. So that's one part. And I think this is going to be the story over over the current year, and I think potentially beyond. That the economy at the underlying will start doing better, and it has a certain amount of catching up to do. So it could be a more extended economic cycle than globally. Your point on bond yields and on macro, I think, is very well taken, right? That you could have a certain amount of uncertainty there. You are having a certain amount of uncertainty there. And that can keep both valuations in a flux and can hurt flows, right? So I think that remains the thing that you need to worry a little bit about or watch for a little bit more closely. The issue with that is it is very hard to call that. So the way I would look at it is that this element will create more volatility in the market, whether it is event-based, whether it is rate hike-based, or whether it is just general flows and things that can disrupt markets. The way I would look at it is that is what is potentially going to give you opportunities to buy and to trim, right? You have events of rates going up, markets come off, it gives you a little bit of a price point which can actually get you to buy, right? But I think that is going to make it a more uncomfortable year than what you've had in the last 1 or 2 years.
Sure.
Even though, so that will be, even though the economic side or the corporate earnings side is actually going to be much better and much more stable.
Yeah.
Right. And I think, it's going to be in contrast to what you saw last year, right? Where it was all macro, right?
Yeah.
Without enough micro and you still got a lot of returns, right? What it meant was that you had very limited volatility. This year, you'll probably get much more micro, but it'll be less comfortable on the macro, which in my view, and that's a call you have to make, that is going to be it's going to be an extended cycle, will give you opportunities.
Okay. So in your view, it will give you opportunities. Okay. Yeah. Let's talk about the couple of negatives first before we move on to what could work and what has worked in Q3 as well. Right. Actually, can I first start off with that? What's worked in Q3?
Absolutely.
Because you would argue that rural consumption has done well, maybe IT has done well, but a lot of other pockets, PSU banks, for example, just kind of put paid to any kind of earnings beat that could have come in Q3.
Absolutely. Yeah. So I think, as I said, the most robust part of this is really the consumption side, which is more broad-based, where the volumes are coming back, notwithstanding the fact that there was a base effect, even on a Q-on-Q basis, you have actually seen volumes come back. I think that was probably the healthiest part of this entire quarter. And I think that's a very hopeful part of it, because when you start seeing volumes, right, I think that gives you a sense that there is activity going on, there is a buzz going on. And that, I think, is the most, that tells you that there's a certain vibrancy in the economy, right? That is what then leads to smaller amounts of investments, smaller amounts of expansion, and at an aggregated level, it also provides you a certain amount of big picture investment. And I think that would be the biggest positive. I think the PSU banks and the banks in general have tended to be a little bit of a disappointment, these recent revelations notwithstanding, right? I think the challenge has been twofold, that you've been expecting asset recoveries or asset resolutions or asset pricing in terms of provisioning, and that has got pushed back. And has got combined with a period when yields have gone up, right, which makes it harder for P&Ls to support some of these charges that come through. So I think that is really the pushback that has been there in the quarter, that at a big macro level, does the risk that the micro cannot translate into macro investments, because this intermediate layer in between has a little bit of a challenge. Okay. And I'd say that is where it becomes a little bit of a sticking point in terms of how you pronounce the recovery as it goes out and how you pronounce the mood of the market.
Okay, what do you think of autos? The numbers, save for maybe Tata Motors, looked ho-hum. The commentary was pretty okay, but the valuations have taken a bit of a beating, or at least the stock prices have taken a bit of a beating in the recent past.
Yeah, I think in some senses, again, the demand side looks good. Very few management want to be very bullish, right? But if you look at the overall numbers across two-wheelers, across trucks, across four-wheelers, I think by and large there is a robustness in it. I think from a market and a valuation perspective, it was basically for a point in time, it was the only game in town. Now there are other games in town, so I think there's a little bit of correction in that. The market had generally moved. Globally, there's been a little bit of a challenge. So I'd say the explanation for the market pullback on numbers is predominantly a market element and the fact that these stocks had moved, rather than anything that's come out in the numbers or in the commentary, which I think continues to be really reasonably consistent.
Okay, so what's the other game in town that is looking as strong? You mentioned, in addition to autos, there's probably other things which are started looking really well.
I think in terms of numbers, if you were to look at commentary, I think the consumer credit side still continues to be very decent. I'd say the construction side, I think that looks very healthy. They're much smaller businesses, but I think that is a very encouraging place where you've actually had a certain amount of consolidation in the number of companies and the way they're getting orders.
Yeah, long spoken about, but hasn't quite meaningfully come through. You thought it came through in Q3?
I think clearly. See, what you don't want and what the market will not pay for is, you just show huge order books and people are not sure of the money you're making or the margin that's behind it. In fact, if anything, what you did see was a reasonable build-up in order books, not as much as the biggest bulls would have expected, but almost everyone showing a margin expansion. And I think that is very material, because what it is showing is that the quality of order booking for the guys who are taking them is actually very good.
Yep.
And I think that is very, very important, right? I'd say, I think the metal side was, of course, clearly quite robust, but that is something that can't be, attributed to local factors. I'd say IT was a little bit encouraging, right? The numbers
large cap too? I mean, mid cap, yes.
Mid cap has already done well, but I think large cap too, the commentary that you're getting and the fact that the US seems to be chugging along so well at this point in time, and the fact that in your books you've got a decent amount of digital growth, I think that combination is actually playing through reasonably well.
Do you guys like large cap IT out here? I mean, the top 4 or 5
Well, selectively, but we do believe that as a macro theme, that is something that is clearly coming back. I think the way their portfolios are put together, because for a long time, you had the challenge that digital was a very small part of your business, right? And that was what was showing traction. Now that has become a much larger part, or a part that makes a difference if you grow rapidly. I think some of the areas, the adjustments to cloud and stuff like that, the bulk of that has tended to happen. So I think there you're tending to see a change, but selectively we like stocks there.
Okay, large cap, mid cap, both? Or do you believe mid cap has done its bit already?
Well, I think mid caps have had a good enough run. I think there'll probably be a little bit more risk-adjusted opportunity on the large cap side.
Okay, risk-adjusted opportunity on the large cap side. Great. Healthcare, not enough index presence compared to what used to be the case. But is it possible to talk about green shoots here, or does it remain too volatile to be able to call it right now?
I think at a sectoral level, it remains a little early, right? Okay. The US continues to see, at least in the regular generic space, more than pricing competition, a huge amount of filing that's happening. I think what's changed is the number of people providing it, so it just naturally flows through more competition, right? Complex generics is a little different. I think that people will have much better pricing, but that will tend to be more selective and slower in coming through. I think the domestic has been a little softer than what people would have expected, whether it is the GST or the DMON or the whole balancing on that front. But yeah, there isn't enough to suggest that you're going to get a material delta on that part. And again, you can argue that the adjustments are taking place, but are you close to the end of the adjustment cycle is a little hard to call. It'd probably be a little presumptive to call that.
Yeah, it's interesting. When Taro came out, or for Sun Pharma numbers too, the talking point was halal inspection and not really what will happen to the numbers.
Absolutely. Right. So at the moment, and I think finally, this has two elements. The regulatory bit has been very uncertain. Quite honestly, I think it'll get more predictable, at least in terms of timelines, rather than the decisions that you get. I think one thing that the FDA has done, at least our sense, is that they're speeding up, right, and giving you timelines in terms of when their decisions will come. So that will bring in a certain amount of predictability in terms of when stuff will come. What will come, of course, remains unpredictable. But I would tend to believe the diversion of the market's focus, right, from the real business will moderate a little bit going forward as far as pharma is concerned. So they will start looking much more at the real business. But the real business is not at a stage yet where you can say, okay, at most it's another quarter, so I'm ready to take the chance now.
Okay. Interesting. Last couple of pockets, and I wanted your view on cement. Now, a clutch of people bullish on this as an ancillary to the whole growth theme that we'll have. I thought, save for maybe ACC and maybe a couple of others, the numbers didn't quite live up to the mark. Or do you think otherwise?
Well, as far as our numbers are concerned, they actually did much better.
Oh, yeah?
Right? So they did much better. Obviously, cement is one of those, everyone has a view on it, and, it's obviously an important part of what the rest of the economy is tending to do. Our sense was that while you haven't got the pricing and you haven't got the volume that you would have expected, I think the tightening in terms of how businesses have been operating has been actually much more significant than people have realized. And that's why you're getting aggregate numbers that I think are a little better than what the market expected, at least clearly compared to what we expected. It was a pretty strong quarter.
What, operationally in bottom line, not on the top line?
Not on the top line. That's what I'm saying. Not necessarily in terms of volume, not in terms of price, but the bottom line that is coming through just better management of costs and logistics and transportation and stuff like that. The numbers have tended to be a little better there.
So you think the earnings growth could actually come in a meaningful way for cement in FY19 because volumes or price or both could make a comeback?
Yes, they could, and obviously the operating leverage is very high in a business like this. I would say the numbers would be good, but I don't think the underlying, either in terms of price or volume, will be runaways. I think it is more of a U. I think there is this market expectation that you will get a V at some point in time, whether it is a capex spend and so ancillaries that feed into it. I think it will tend to be a more measured kind of U. But because they've created a base where their operating costs have been tightened up very substantially, I think the bottom line impact could tend to be a little higher as long as some of those numbers come through.
Okay, quick 30 seconds, Aditya. We are out of time, but one dark horse, earnings-wise for calendar year 18 or FY19?
Well, IT is not particularly sensitive. I think the banks you could actually. Banks is a function of how they provide, right? If they are tough and tight in the last quarter, if you've noticed what's come out in the press in terms of some of the expected recoveries that you are talking about in these asset sales, that could give you a little bit of cushion. So that could be a pretty nice one.
Wow. Okay. Let's wait and watch. Hopefully all of this measures up to a fantastic Q4 and an even better FY19. Certainly the bulls are hoping for that. But Aditya, Narain, thank you so much for taking the time out and speaking to us here at Bloomberg.
Thanks so much.
Well, out of time completely on this leg of Indian Open. Keep in mind the markets have slipped a little bit from the levels that they were at. No alarm bells, but about 0.5% off for the Nifty. The Nifty Bank is now correcting a bit more, so about 163 points. Watch out for that space. Thanks for watching this leg of Indian Open. Up next is the FNO Show.